Hello, ladies and gentlemen, and welcome to the show. Glad to have you guys here this Sunday. Now, here's the thing. This is an alert, quite seriously. The global financial system, the Federal Reserve right now is on they're under alert, and they're in a situation right now where they're in panic mode. And like I say, they're the only thing standing between us and absolute financial catastrophe. I want to read you this little bit of this. According to the former Bank of England Governor Mervyn King, Lord King, who was in charge at Threadneedle Street during the near death of the global banking system and deep economic slump a decade ago, said, "The resistance to new thinking meant a repeat of the chaos of the 2008-2009 period was looming." Giving a lecture in Washington at the annual meeting of the International Monetary Fund, King said that there had been no fundamental questioning of the ideas that led to the crisis of a decade ago. He said, "Another economic and financial crisis would be devastating to the legitimacy of democratic market system." He said, "By sticking to the new orthodoxy of monetary policy and pretending that we have made the banking system safe, we are sleepwalking toward that crisis." He also added that the United States would suffer a financial Armageddon if its credit bank, the Federal Reserve, lacked the necessary firepower to combat another episode similar to the subprime mortgage crisis sell-off. Quote unquote. Shows you the problems we're in. I'm going to tell you, I'm going to predict something right now, and I figure it's got a 40 to 50% probability of happening. Doesn't mean it's going to happen, but I'm giving it probably a 40 to 50% of chance of happening in the very near future. And this is this enormous bubble in bonds that we got right now, with bond yields worldwide in different places going down below the negative point. Now, I know you hear all these guys out there right now who said we're going into negative interest rates, and the yields are going to go down below zero and stuff and everything. I'm giving it about a 40% probability that it could take them all by surprise and move exactly, especially in the long-term yields on bonds, could move exactly in the opposite direction from what they're expecting. Now, I mean, I was fooled on bonds. I thought the bonds were going to go up. The bond yields are going to go up back when the 10-year hit right around 3.25%. Instead, it went in the opposite direction. Yields went down. It went down to about 2% on the 10-year, or under 2%. I'm going to tell you, this time things are different. There is a bubble that's been built, a credit bubble that's been built, that is basically, the whole thing is a house of cards. What I mean by that is there's underlying money, things that are of value. Your house, equity in your house, your car. You've got underlying values of things like gold, things like silver. And yes, now even cryptocurrencies, because the fundamentals behind cryptocurrencies is actually rather good, especially for the top coins. It's built on it's built on quite a sound foundation. A lot of people disagree with me about this, but they're limited in supply, just like precious metals and stuff. It's built on a really quite a sound foundation. But the rest of this financial system, this paper menagerie that they've built, it's enormous, and it's like what they've done is it's like a giant, enormous credit bubble. I can't begin to describe how they've basically manufactured money from nothing, and they've continued to do this for such a long period of time that they've built up this enormous economic bubble built on all these paper products, derivatives, ETFs. I mean, I could go on and on. How they've built money from nothing. They've expanded the monetary base on credit, which is actually debt. And they've built this huge bubble that if it pops and it bursts, it can create a deflationary spiral that would be, I'm not going to say the central banks can't contain it, but if they lack the necessary tools, if they let one part of it go, the whole thing would burst. So they're going to have to rush in. What they're going to have to do is the exact same thing that they did with the repo market. Is whenever it starts to burst in one sector, they're going to have to rush in with liquidity. After a while, it's going to become blatantly obvious that they are supporting the system at all costs. Because the alternative to this is to let it all burst. And like he said there, financial Armageddon. Quite seriously. I mean, everything runs on money. And if they let it all burst in the opposite direction into deflation and let it all deflate, I mean, that would be the way to get the economy back on a level playing field again. What we've done is we've built such an enormous, I mean, I can't begin to describe it, what we've done. I say I haven't had any part in it, but what the financial sector has done with all of these credit derivatives and swaps and defaults, I just go on and on with all these money products that they've created, including pumping up the stock market to unbelievable highs, pumping up the real estate market. It's all like something that's been pumped in the markets. Everything is buoyed this way right now, so they can't let it turn over because it's everything. It's the entire system. And so the only thing standing between us and that rolling over into catastrophe is the central bank. Right now, people are looking and they're a little bit stunned. They're like shaking their head and they're saying, gee, what happened in the repo market? And why is the central bank in there? This is just the first hint. This is like the first thing that's happening. Now, when we get a second thing, a third thing, a fourth thing, all of a sudden it's going to become apparently obvious to everybody that all the markets are actually being supported by the central bank. With liquidity, it's going to start to dawn on people, hey, I mean, this whole thing is just a house of cards held together by the central bank. And at that point, the central bank can't let it go. They can't let it slip. They can't let it fall down the cliff. And the amount of liquidity they're going to have to inject in order to keep it going is going to start to cause profound inflation. This is going to act like a driver for something that's waiting in the wings. Now, actually, I shouldn't say something. Two things that are waiting in the wings. And right now, neither one of them are really going much of anywhere in price. And that's gold, silver, and cryptocurrencies. So actually, three things, but two main things is precious metals and cryptocurrencies. Okay? They're not really going too much of anywhere yet. But as the central bank has to keep this house of cards afloat, and they have to do so at all costs, and they've already proven that this is the direction they're going to go. They proved it just not long ago with what they did with the repo market. And some people out there say, well, they're going to have to come to they're going to have to put it through Congress or everything, a bailout of maybe 20 billion or 50 billion or whatever they need, and they'll have to go through Congress or whatever. I don't think so. I don't even think they're going to ask us. They're going to do just like they did in the repo market. They're just going to dump the money in. And yes, it might take $20 trillion, They're just going to dump it in. They're not going to ask us. They're just going to dump the money in because they figure that it's a panic situation. And we might not even hear about it until it comes out 4, 5, 6 days later, 10 days later, what they're doing. And they'll keep doing this repeatedly, these massive injections of capital and liquidity into the system to keep this system actually afloat and keep it going. This is going to act as a driver for the cryptocurrencies and the Bitcoins and the gold and silver. It's going to act as a driver to drive the prices up. And at a certain point, they're going to start taking off, and then an unusual thing's going to happen. Now, I watched a show the other day, and you know, cars don't ordinarily fly. I mean, it's made out of steel. It's got a big, heavy engine in it, big, heavy transmission in it. It's got a big, heavy rear end in it. It's got all kinds of steel surrounding it, glass windows and everything. It's not made to fly, be aerodynamic actually and fly. Now, sometimes I've seen films of a car coming over the top of a hill, and its momentum will carry it out so it'll actually leave the pavement and fly for a little ways, maybe a couple 100 feet before it lands. They used to do that on the Dukes of Hazzard, if you remember the show. You know, the car would go flying if it comes off of a ramp or something, you know. But to actually be aerodynamic to fly, it's not designed. It doesn't have wings. It's not designed like an aircraft. But you know, if you can get the circumstances just right, I've learned that a car will fly. I saw a drag racer, a drag car, on the internet, and it took off, and you know how fast those things accelerate. He went up to about over 200 miles an hour, really fast, and the wind got underneath that car. And quite literally, the car, because of the factors involved, the car actually flew for about 100 feet. It actually lifted off. The car tilted up a little bit. The front end tilted up a little bit. The wind got underneath it. It actually lifted off to the rear wheels come off the ground too, and it was up about 3 feet of air underneath the whole car. It wasn't touching the ground at all. And it actually flew until it slowed down enough where the wind resistance and wind drag, and then it come back down and landed. You know, when it slowed down a little bit from, I guess it was going about 220, 230 miles an hour. When it slowed down to about 160 because of the air drag, then it come back down and it landed again on the ground. But under the right circumstances, very strange things can happen. Things that ordinarily never would happen. And I believe that what's actually going to happen here is nothing more, nothing less, because the circumstances have created this. Circumstances that never existed before and will never exist ever again. Of this enormous credit bubble that they've built out of debt and everything else, you know. I believe that a wealth transfer is actually going to is very possibly, and I'm giving it quite a high probability of happening, where all of the wealth that's associated and stored as in the paper system, let's call it the paper system, the menagerie of paper money products, you know, out there that don't really have any fundamental reason why they have value. You know, it's absolutely ridiculous what's happened. That all that wealth and value that's stored in them, or supposedly stored in them, that represents everything we have. It represents our houses, it represents our labor, it represents our labor into the future even. It represents everything. All of that wealth doesn't cease to exist if the financial system collapses. Your house is still going to be there. You're still going to be there. Everything's still going to be there in place that we assess this value to. But the value could be transferred over into, I believe, real hard, tangible assets, things that do actually are tied to the ground. Basically, this whole system is like floating free. It's like a hot air balloon right now. It's just floating through the sky, and it doesn't really have any association with anything of tangible value anymore. It's a bubble. I think that when that bubble pops, the value could be transferred into real hard assets that are tied to the ground, like gold. This is where I'm getting at. And this could happen rather suddenly. And just like that driver's driving that car down the freeway there, you know, and he's trying to beat the other guy in the other lane. He didn't know that his car was going to start to fly up into the air and leave the ground. Never occurred to him, not a clue. When he was driving along, and maybe he was 170 miles an hour and he still had his foot on the accelerator and he was heading up toward 200 miles an hour, he didn't know that when he exceeded 200 miles an hour that the car was actually going to lift off and fly. I mean, cars don't fly. Well, that's the way with our financial system right now. We're like going 175 miles an hour and we don't realize what's going to happen next. What's going to happen next is this wealth transfer. And if it happens too fast, it could be a financial Armageddon. But at the same time, I say it could be a financial Armageddon. I'm hoping that it won't be. I'm hoping that it'll be some sort of a soft landing where they're able to extend and pretend a little bit longer and slowly move this way. But I still believe this wealth transfer is going to happen regardless. I think the wealth is going to be transferred from this giant, enormous paper bubble that's not attached to anything at all into hard assets, particularly gold, silver, and I think it's going to be too much for gold and silver. I think what's going to happen here in this situation is that they're going to go for the gold and silver first. That's the first thing they're going to go for. It's the first idea they're going to have when this thing starts to burst, to get their money out of everything like mutual funds and stocks and bonds and all these financial wealth products and derivatives and everything else, to pull their money out, which is going to burst the bubble, and they're going to want gold. And they're not going to want the paper contracts like GLD. They're not going to want that. They're going to want real gold. And when this thing bursts, this enormous bubble bursts, warning you guys that they're going to go after the gold and silver first, and it's going to disappear. It's all going to disappear. The real physical, you're not going to be able to buy it. And the people that own it are going to watch the price go up so fast that they're not going to be willing to sell. I mean, just think about it yourself. Say, you know, we don't have a lot of money, but say you got a 1 ounce gold coin, okay? Think about it. And you start watching, you hear about this, you hear that the markets are all popping, there's a mad frenzy in the gold, a mad frenzy like never been before, and you're going to go every day, and you're going to watch that price of your coin go up every day. You're going to be looking at the internet or online, going to the sites that give the gold price, and every day you watch it go up $50 or $100, and some days $200 up a day, you know? Do you want to sell it? It's going up $200 a day. Do you want to sell it? What are you going to sell it for? Paper financial products? I mean, you got the real hard, tangible asset that everybody wants. You got that one thing everybody wants. For the first time in your life, everybody else in the world, you got something that everybody else in the world wants. You're holding it right in your hand, and you're watching the price go up $200 a day. You're not going to sell it. Nobody else is either. It's all going to be the same thing. Nobody else is going to sell. And the stores, they're not going to have any, and these stores that sell it, you know, these coin shops and stuff, they're not going to have any inventory. And there's going to be a big long line waiting list, you know, a big waiting list. They're going to be taking people's money, putting them on the waiting list, taking their order, putting them on the waiting list, and they're going to be say like it's going to be 8 weeks before we can get any more silver, or a month before we can get any more gold or whatever, you know. So they'll be on the waiting list, big long waiting lists on every coin store to get some of this product, some gold or silver. I mean, none available. You know what's going to happen? It's going to be such an overflow of all these people, millions of people wanting this kind of stuff. Cryptocurrencies are going to take advantage of the overflow. And the problem with this is I think that gold and silver of this wealth transfer, gold and silver are going to get the first end of it. And probably only about 20 or 10, maybe even only 5 or 10% of the money is going to spill out of this bubble that's bursting. And it's going to go into gold and silver before gold and silver's gone. You can't get any more. You know, and if for some reason they're able to manipulate the gold and silver price by in the paper markets, you're going to find that the premiums are just going to separate from the other price, and it's going to go to absurd levels. Like, you know, 1 ounce silver coin, it might still be at $15. Who knows? They can manipulate the paper market as much as they want, but then you might have to pay a $300 premium to get the real coin. So what's the real price for real silver? It might have a totally different price from the paper. But at any rate, even if the paper price does keep up, or the spot price does keep up with the actual price of the physical metal, still we're going to be looking at prices that are high and rising. And at the same time now, this spillover, so gold and silver is going to be there to catch the first bit of this money that when this balloon pops. I'll tell you what it's like. It's like a balloon full of liquidity, and when you prick it, it's all the liquidity is going to spill out. It's going to have to go somewhere, flooded liquidity. You know, it'll pour into gold and silver first, and gold and silver won't be able to take it all, and it'll overspill. And then the cryptocurrencies will start to catch what's left. And the thing is that overflow, I think, is going to be 10 times greater than what the gold and silver caught but couldn't handle it all. So you're going to have all these people holding the gold and silver, watching it go up daily. It's going to be catching a bid, you know, and it's going to be going up in price because it's going to be in short supply. At the same time, the cryptocurrency is going to be shooting to the moon too. But I think the cryptocurrencies is built, the way it's built from its foundation, it's built as a liquidity sponge. Just one Bitcoin could take all of the value of this entire bubble, all the trillions of dollars. It would just keep moving the Bitcoin up higher and higher, and each Satoshi would keep being worth more and more and more. But, I mean, you don't have one Bitcoin. You got 21 million of them, and that's just Bitcoin. And you got all these other coins all lined up, ready to accept all of this liquidity and this wealth transfer. So it can handle it. Not only that, there's another factor you have to take into consideration is the gold and silver. That's old-fashioned. That is something that the modern generation is not going to be likely to actually use as a means of exchange. Whereas these cryptocurrencies are not old-fashioned at all. They're the cutting edge of currency exchange, being able to send money across the internet instantaneously anywhere on Earth, you know. And this is the new way. This is like moving from the old, what they used to call snail mail, into email. It's as big a leap. You know, and nobody hardly uses snail mail now unless they have to. And this is the same way with gold and silver. Who's going to use real physical gold and silver coins? You can't send them across the internet. You can't do this. You can't do that with them. Things that we need to do in the modern age. So the cryptocurrencies, I think, is going to take actually more of this liquidity out of this dying system than the gold and silver will. But don't underestimate how high the gold and silver will go too. All of it is going to go to the moon. Crypto and gold and silver. The whole works is going to go to the moon, and all of this other stuff is going to go to zero. Nobody's going to want it. This is a financial Armageddon because most people out there, they're not into gold and silver. Most people out there are not into cryptocurrencies either. Most people out there, they have their 401ks and their financial products, or their stock market. They got their broker and all this in their portfolio. And they're lucky. They're very lucky if they even got 5% gold in their portfolio. And if they do, it's GLD. You know? It's all paper assets. It's all a big pile of paper. If they pull their portfolio out and they open it up, it's all just a bunch of slips of paper. Quite seriously, in this financial Armageddon, the ultimate conclusion, either way it goes, if the Fed decides that they're going to keep it from bursting and they keep injecting liquidity into it, they'll make it worthless in the end. It'll just take a little bit longer. And if the Fed decides that they can't keep up with it and they're going to have to let it all pop, well, then the financial Armageddon will hit quicker, but it'll still all go to zero. So either way, all of these financial products that are not tangible, They're not associated with anything really of value. They're just paper built on top of paper in this giant paper pyramid. It's all going to come tumbling down, and it's an unusual situation, just like that car that was able to fly. Cars ordinarily don't fly. Well, financial systems ordinarily don't do things like this, but they've created a situation where they've enabled this to actually happen. And it's going to be a one-time deal. Never happened before in history. It's getting ready to happen. I'm warning you guys about it. Now, the second part of this is the bond market could take an unexpected turn in all of this, and especially on the long end of the yield curve, which the Federal Reserve doesn't have any control over, we could see bond yields spiking up higher than you could ever imagine during this period in time. I don't know, guys. I'm going to tell you, I don't know what the end result of all of this is going to be. This is almost like when you see some sort of a situation happening, like say somebody come out of their house and they're standing out front of their house, you know, and they said, don't go in there. Say, well, why? He said, well, the temperature control valve on my hot water heater, I took it off and replaced it with a cap. And he says, well, the boiler, you know, it's overheating in the house, and I don't go inside the house. We don't know what's going to happen. That's the way with this. Building up pressure, don't know exactly how it's going to, when it all happens, it all happens in a nanosecond. The whole thing just kind of blows, and you just don't know which way or just exactly how it's going to completely unfold. But you know it's going to go real soon. And trying to configure exactly how it's going to happen is a little bit hard on this end. But what we already see happening, things in motion tend to stay in motion. So we see the Fed responding to any sort of a crisis situation within the financial system. They'll probably continue to do so. But they'll probably have to do so more and more as time goes by. And this is probably how we'll see it unfold, but that's going to create inflation, and that's going to be your up boost in price for all of these precious metals and cryptocurrencies. So there we basically have it. That's what I see coming, and it's starting. Now, over on the other side of the pond, in Great Britain, we got Boris Johnson. This weekend, he went into Parliament, and they had a law called the Ben Act, where if they couldn't get nothing done, he'd have to write for an extension. Now, he had to adhere to that law, Boris Johnson did. But Boris Johnson's tricky, a little bit tricky. He wrote the letter asking for an extension, and he didn't sign it. And he wrote a second letter giving reasons why they shouldn't give an extension. So, they're not necessarily guaranteed to give Great Britain an extension on this at this point. It might not be in their best interest. What's in their best interest for not only Great Britain probably, but for the European Union, more so than Great Britain, it would be to get Boris Johnson's deal through Parliament. Now, this whole thing's coming down to the wire. I mean coming down to the wire. What's going to happen? They only got till the 31st of October. I don't think they're going to extend this whole thing past the 31st of October. I don't think there's going to be an extension. I don't think there's going to be any sort of new vote on it either. I think what's going to happen is either they're going to get that deal through Parliament or they're not. I've never seen, in my opinion, the British Parliament just doesn't get things done. I mean, they debate and debate and debate and debate, and then they extend it or decide not to vote on it or whatever. They just don't get nothing done. Anyway, they're going to have the deadline's approaching. They're going to have to try to get something done. Will they vote yes or will they vote no? And if they don't vote for it, we very well could have a hard Brexit. or they could get this new deal through. We're going to have to wait and see what happens. But it's all coming down to the wire now. We're going to know very shortly what's going to happen. We're going to know in just the next few days what's going to happen with this situation. If it goes into a hard Brexit, this could upset the apple cart on the entire world's global financial system because it's ready to go. Right now, it's just like that race car I told you about. It's hit 170 miles an hour. It's accelerating fast. And when it hits 200 miles an hour, it's going to lift off. That's where we are with the whole thing right now. We're not looking at a long period of time now before something's going to happen. Something's going to break in the world's financial system. If not in one place, it's going to break someplace else. And we can see evidence of this. We're going to go into this crisis, and then we're going to see what's going to happen with the crisis shortly thereafter. You guys stay tuned. World events are getting crazy right now. They're coming faster and faster. Stay tuned. I'm going to keep you guys up to date as best I can in this situation. It's an evolving situation. Give me a thumbs up. Thank you for listening to the video. I really appreciate you guys. Bye-bye for now.